Hello and good evening. I'm Melisa Idris. Welcome to Consider This. This is the show where we want you to consider and then reconsider what you know of the news of the day. On July 1st, the government will implement a revised sales and services tax, raising the rate for select sectors and certain imported goods. It's part of Putrajaya's broader push to strengthen Malaysia's fiscal position by widening the tax base. But will the move strike the right balance between revenue generation and public burden? And in defining what's non-essential, who ultimately decides what Malaysians can afford to consume? So joining me on the show to discuss this further, I have Dr Veerinderjeet Singh, who is a Senior Advisor on Tax Policy at KPMG. He is also the Vice Chair of the Global Tax Commission of the International Chamber of Commerce based in Paris. Veerinderjeet, thank you so much for being on the show with me today. The government says that this is all about strengthening Malaysia's fiscal sustainability. In your view, at this juncture of Malaysia's economic reforms, I'm just wondering, is this the right time for us to be expanding the SST, and is it the right tool for that objective?
Thank you. Well, actually, no time is the right time, if you honestly ask the question, right? But the fiscal consolidation approach that the government had started to embark on is something that is needed for a country. We all know this, but sometimes we tend to forget it, right? Because we look at the impact on our pockets and therefore we get very personal about everything. So question is, it has to be done. And also remember, we have the Fiscal Transparency Act, and that also puts certain types of, let's say, targets, KPIs on the government in terms of its fiscal management of the economy. So I think what the government is trying to do is consolidate things, move. You can always say that they could do it next year. They could do it, but the point is there is a fiscal deficit. There is a clear objective that we need to reduce the deficit, and this is one of the ways in which it is being done. And we always expected that it will be widened in scope. And I also would like to point out one thing. Now, roughly, you'll find that this current scope of the SST, in terms of the coverage of goods and services, is now roughly equivalent to what it was under GST. All right, number one. And so when people say we don't collect enough compared to the GST days, we will collect enough now after you've brought it all in. It's just that we find it, the timing. We find the issue with the timing. So I think the point is, if we had the luxury of time, if the government had the luxury of time, we could always do this a year or two later as the economy evolves. But remember, the economy has also suffered a number of issues globally as well. So those are the challenges we have.
So I just want to come back to the point about the public reaction. I mean, we've seen a lot of public reaction asking why the government didn't just bring back GST. So this debate, this framing of SST versus GST, I'm wondering what you think as a tax expert. Is that framing helpful? Is it unproductive? Is it missing the point? How would you describe how the SST expansion is being discussed in the public sphere right now?
Right. I think if you want to have a discussion on GST versus SST, we may have to have another show to discuss primarily that. But let me try to summarize this. The issue with the SST right now is because of the fact that it's it can lead to cascading of taxes along the way because there's no input-output mechanism like what there was under GST. That's a fundamental point. So the government politically has said it very clearly, and we, in those of us who are practitioners, we know the government's view that GST is not on, and therefore we have to work with SST. So I accept that fact, but when you work with SST, you need to reduce the cascading, right? And therefore, we, in terms of the government and the advisors, we decided to look at a business-to-business exemption, which is never there under SST. But that's the kind of things that the government has started to do, and they started doing this actually from the time they brought back SST. There was a move to look at business-to-business exemption so that you will soften the cascading of taxes. Cascading taxes is simply that one party will then add on the tax to that person's production cost and then put a profit margin on the total, and then so on and so forth. And so the government has chosen to go on what we call a targeted approach. And the targeted approach becomes complex because you got to look at who is impacted, who is not, we have unintended consequences. And that's why the government took quite a bit of time. And that's why the delay was there, trying to ensure that they don't have unintended consequences. Right. Now, invariably, there will always be some consequences. So this is where I think government has expressed the view that they are willing to listen and perhaps look at how they can manage this and perhaps give some concessions here and there in the SST.
From a tax administration perspective, what do you think, or what are you most concerned about in terms of consequences? And may I also ask you what concerns you've heard from the business community about adjusting to these new rates and the new sectors that are now included?
Yeah, one of the gripes anyone would have is that you don't start in the middle of the year with major changes. And perhaps you should start at the beginning of the calendar year. Because that allows businesses, companies to budget better. Most companies are looking at a December year end, right? So that's one issue. That's why it does have an impact on various items, depending on who you are, depending what you buy, depending what you sell. It now adds on to cost. But remember one thing as well. Some will argue that if it adds on to your costs, you have more to pay out. You are actually not the one bearing the SST. The SST ultimately is borne by the end consumer. So businesses need to perhaps be mindful of the fact that, yes, we all know inflationary aspects will be there. We know inflation will go up. Government is well aware of that. Any increase in the GST or SST will lead to some inflationary impact. The challenge, however, is that businesses are just saying it is too short a time for them to adjust their processes, the timing. So the timing perhaps could have been done better, but remember that this is part of last year's budget. So it actually was meant to come into effect because of last year's numbers that we were talking about. So at the end of the day, the longer you delay, your fiscal deficit management becomes perhaps pushed to you kick the can down the road. So it's a chicken leg situation. Is this the right time? Is it the wrong time? There's never a right time, but at the same time, one can always say that you can defer it to next year since you've already taken 6 months off, and it's only starting now. So perhaps we can bear with it. That could be a better option. But yes, inflationary aspects are real. That's no one can gripe with that. But I think businesses need to understand that, yes, the end result is that there will be increase in your costs and consumers will ultimately pay for it. That's the reality of life, and we have to accept that any consumption tax will lead to that inflationary impact. So the main concerns of businesses was about inflationary impact, but then it means to them increasing their production costs and therefore charging more. And that, I think, will happen because we don't have price controls on all these items. The government cannot control prices of goods and services. Otherwise, we are not practicing capitalism at its best.
It's free market at work, right?
Free market.
Veerinder, can I just ask you, if we were to look at tax reform of the country, we've spoken a lot about the government has spoken a lot about the need to widen the tax base, and I'm wondering if the aim is to have a more efficient and equitable and kind of future-ready tax system. What is still missing from Malaysia's overall tax reform approach? The current approach today, is that working, and what should the next step be after SST expansion?
Well, I think at the end of the day, you look at the current tax system that we have, both direct and indirect taxes. Actually, we have all the relevant taxes one needs to run the system, right? And so there's nothing new you can add on at this stage in life. because we can't think of a wealth tax. We can't do all that because that's for developed nations. It's complicated and for different objectives. So we have actually all the various types of taxes. What is happening is, because we all know there's a narrow base, so we are seeing a widening of perhaps personal taxes over time. It has happened over the last 5 years. The high income group pays a bit more, and so on and so forth. We looked at the dividend tax, which is a minuscule measure last year, 2%. But those are the little things being done which sometimes don't add numbers, right? The dividend tax, for example, is a little bit of a misnomer. The 2% doesn't add much. So the point is, we have it, we have the type of taxes. Our problem is the informal economy, and therefore our issue should be tax administration and tax enforcement. How are we reaching out to bring the informal economy into the net? There are some ways of managing that initially, and one of them is perhaps what we call a presumptive tax, which obviously will take some time to explain. But basically, it's a simpler system for the smaller companies or businesses to come into the net, and then ultimately they graduate over time and they can then go into the full-blown system. So there are little administrative measures that can be taken, but if you're looking at the type of taxes, we have it all. And also, I am one of those who said very clearly when GST came in years ago that do not be surprised that the rate will keep increasing over time, right? And that is what consumption taxes are. And if they keep increasing, which they would, as can be seen in many countries, if it brings in adequate revenue, then you may see a reduction in some of your corporate taxes and your personal tax rates. But that is dependent on how well what revenue we recover. So I think what we now have is a balancing game over time, looking at what we earn, how we do it, solve some of these little issues along the way, and then look at the numbers that are coming in and then manage it accordingly by administrative measures, which could mean increasing some tax rates, reducing some tax rates, but more importantly, bringing in the informal economy. And this is where e-invoicing is the game changer. If, and I say a big if it's implemented efficiently and effectively. So that's how I see the game.
Right. Thank you so much for sharing that analysis with us. I really appreciate your time. Dr. Veerinderjeet Singh, Senior Advisor on Tax Policy at KPMG Malaysia. We're going to take a quick break here and consider this. We'll be back with more. Stay tuned. Hi, welcome back to Consider This. I'm Melisa Idris. Let's continue our discussion about the expansion of the SST, as taxes of between 5 to 10% will be imposed on discretionary and non-essential goods and services starting from July 1st. Joining me on the show right now is Dr. Ahmed Razman Abdul Latiff, who is the Director of Coursework Programmes at Putra Business School. Dr. Razman, thank you for being on the show with me today. I'm hoping we can start a conversation by looking at some of the new sectors that have come under the SST expansion. Construction and financial services, I think private healthcare, private education, I think beauty services also now are going to be coming under SST. From an economic perspective, do you agree with that list? And are these the right sectors to target if the goal of broadening the tax base without burdening the lower income group is to be achieved?
Well, we have to look way back when Dr. Sri Anwar was the first time becoming the finance minister during the 90s, when his goal or his so-called accomplishment is to come up with surplus fiscal policy. And this is something I think become his personal crusade, how to finally reverse the deficit fiscal that we have been experiencing since 1998. And at the same time, if we look at the current unity government, the word unity itself means that it is not dominated by one party, meaning that you cannot do something drastic that will create the anger of major population. So the best way or the best option that he has is not to disrupt the whole taxation system, basically coming out with or reverting back to GST, but more or less improvising on the existing one. But the focus will be targeting the non-essential product or services, which might not be acceptable to some quarter of the population. But what he trying to emphasize again and again in his speeches is that these are the essential, these are the products that are not really consumed by the majority of the population. However, it's still debatable. People pointed out that some of these products are no longer considered premium. It is a part of the common consumption of the majority of the population. But of course, when we look into what he has reiterated and also committed, that this is not absolute, meaning there's room for continuous improvement, meaning some item might be excluded from such increase, and it's not necessarily a blanket imposition of a higher taxation across a category of sector. So we probably will see further enhancement or improvement on the scope of the tax increase.
Right. Well, so I want to explore that a little more with you, because let's take the category of food, some of the foods that have been characterized as non-essential or discretionary spending. Malaysia relies quite heavily on imported food. More often than not, it's because we can't produce certain items locally in sufficient quantities or quality. So in that context, there have been people who say that do not tax food, and taxing certain types of food sends the wrong message, like only the wealthy should be able to eat items like salmon or avocados. How do you see this? Is this a valid concern? How should policymakers be thinking about fairness in food taxation, particularly in a Malaysian context where it's really hard to make that distinction between discretionary and essential?
Yes, it is a tricky thing to do, especially when majority of the population actually living in urban city, including the B40 and also M40. So meaning that we have, or do they have a choice when certain food items were considered premium, when in fact they do not have other option or other food to consume. For example, when talking about fruits, we are well aware that apple, oranges, and these are the imported fruit. But what choice or what option do we have when presented with such a scenario? We cannot consume one type of local fruit all the time. So because of that, I think even the Deputy Prime Minister said recently that there will be a review on the type of food that, even though primarily imported from outside, but it is considered as an essential or necessary for the population, that kind of food will get the exemption. But of course, feedback from the public is very important, from the consumer. And what the government really want is to come up with this implementation of the higher rate for SST for certain products. But the improvement will come later upon the feedback by the public.
Okay. Well, I'm just wondering how the public, whether or not the public is ready for a broader tax base. We know that's the stated goal of this government, to address the tax gap. So in broadening the tax base, how do you see that, the timing of it, especially amid other cost of living pressures. We've got the electricity tariffs coming in, then the reduction or rationalization of subsidies eventually this year. How important is the sequencing of these reforms and the communication of such to the public?
Well, interestingly, the latest statistic on inflation rate shows that we experienced an inflation of 1.2%, which is very low indeed for the past many years. And so this actually allowed the government to implement such policy or such a measure due to the fact that even it's going to cost the price of the products to increase, but it is still within the expected or tolerable limit, I would say. Even Bank Negara Malaysia somehow predicted that the inflation rate is not going to exceed 3% this year, and even with the upcoming rationalization of RON 95, the revision rate of our tariff, electricity tariff rate, as well as the uncertainty in the global economy. So it seems that the government believe there is still room for the inflation rate to hike a little bit further, coming from this increase of rate of SST, but it's not going to be too high. And one thing that going to be certain, all the additional revenue and saving from the petrol rationalization after this will definitely be channeled back to the affected group. So there must be immediate implication, positive impact coming from such move, so that the people can see that the government is really taking care of their need or concern.
Yeah, I agree with you. I think public trust is key in any tax reform. But in your view, what can the government do to build buy-in for this? I mean, we've heard the backlash coming in from all quarters of society, particularly the middle class, who feel like they're the ones getting squeezed, and also the SME sector, who think that they might not be able to manage with this sudden expansion of the SST.
Well, if you look at the latest poll by Merdeka Center, the people approval on PMS or government even has increased, meaning that what the government is doing is to make sure there is a transparency, there is a continuation of what they have done, meaning that if they have implemented all these initiative or policy, there must be output or impact coming from such execution of this policy or initiative. So what we have seen, that when the government introduce minimum wage, increase the minimum wage, introduce the progressive wage policy, as well as doing the rationalization of diesel, and then immediately SARA and as well as STR allocation has increased. So this is what important for the people to see that the money being collected or the money being saved has gone to the rakyat. But I do agree, at the moment the focus mainly on P40s, and the M40 group somehow still feel that they're being neglected. So I assume with all this calibration of the SST rate, government probably will be planning something more beyond than just helping the B40s, but perhaps some monetary or fiscal incentive for M40. I think that one probably will come when the focus on the resolution of petrol come into effect, and the money being transferred to e-wallet or MyCard. I think that could probably have some impact on elevating the the hardship faced by M40 as well.
Okay, well, look forward to seeing what kind of developments or what also might be announced in budget 2026. We'll see. Dr. Razman, thank you so much for being on the show with me today. I appreciate your time. Dr. Ahmed Razman Abdul Latiff from Putra Business School there, wrapping up this episode of Consider This. I'm Melisa Idris, signing off for the evening. Thank you so much for watching. Good night.